All right, so right here, you want to, once you have the pre-market scanning criteria down, this is where you want to scan through pretty much all of the market cap and float. In this section is going to be very important because not only the ticker has to fit over 20%, trading 100K shares in the pre-market, and this market cap selections is going to help you to select the right one. Because first of all, the percentage criteria, second is going to be the flow criteria, market cap criteria, then the pre-market volume criteria, and to avoid different sectors. Once you get all the criteria down, you should be able to instantly recognize which one you should trade. I'm going to go over the 5 different market cap selections, and each of them has its own, I would say, speciality. So I'm going to explain what's going to be the most frequent one to trade, what is going to be the one you're not going to place a trade on, especially on the intraday level. Number 1, if the initial market cap is under 10 million, typically if they produce, I would say, a first green day or a massive parabolic, majority of the time they drop by the market close. It's because if the market cap is under 10 million, they're qualified to be a very small cap stocks. And very small cap stocks, 99% of them don't really have any fundamentals. So they're the ones that are most likely to do offering in the after hour, and that scares a lot of people to hold overnight. That's why majority of the market cap that's under 10 million initially, before the spike, they always drop before the market close. I would say majority of the time, you want to track your own statistics on it. Especially on the, I would say, lower floats, not nano float and micro floats. It's between 3 to 5 million. Initial cap under 10 million, they always drop before the market close. And I think the dropping percentage is around anywhere between 70% to 80%. Now, if the initial cap is between 20 to 100 million, then it's going to be a really good range to trade. That's where we trade most frequently. If the initial cap starts around 50 million, 78 million, as long as under 100 million and over 20 million, this is where small caps can run a couple 100%. It can produce a bounce short, it can produce a gap up short. Majority of the pattern happens between 20 million to 100 million. Now, if the initial cap is over 100 million to 200 million, this is where multi-day runner comes in. It is okay to trade, but I do not recommend trading them on intraday level. Most of the initial cap that's over 100 million starts with a really lower price. So they start with anywhere between $1, $2, 50 cents, 70 cents. It will take a couple of days for them to become a multi-day runner, start to gain tons of volume. And when the market cap is getting bigger and bigger, that means for 100 million market cap, you need 100 million on intraday level to pour into the market cap for the stock to go over 100%, right? If the market cap is only 10 million, you only need extra 10 million to pour into the market cap for the stock to go 100%. So the less capital it needs for the stock to go over 100%, the more likely the stock is likely to push much further than you think. So in this case, that's once you understand the concept of how lower market cap tends to spike a lot more compared to a market cap that's over 1 billion. So initial cap between 100 million to 200 million, it is okay to trade. Majority of the time you're trading on a multi-day runner, so you have to wait for a couple of days to trade. Don't trade on intraday level. Now, for over 200 million, this is where it gets a little bit tricky. If the initial cap is over 200 million, that means the stock do have its fundamentals, at least a little bit. And in this case, not only you have to trade on a multi-day runner basis, and the stock has to also run over 1,000%. So let's say the ticker is around $2 and the market cap is around 200 million. Ticker needs to go over at least 1,000%. So market cap needs to reach 2 billion for it to be able to trade. And since the market cap is over 200 million, that means fundamentals are a little bit stronger compared to the market cap that's under 10 million. So they're likely to hold much longer than you think. And I do not recommend trading them on the intraday level. They're not very reliable, and the statistics does not follow the average statistics, pulling back 50%, gap up short pulling back 75% after a bounce short. Market cap over 200 million, Do not recommend on that. Number 5, if the market cap is over 1 billion and it's pretty much not tradable at all, if you are dealing with a $1 billion cap, typically that ticker has really strong fundamentals. And for $1 billion market cap stocks to go over 100% in one day, it's pretty much impossible. The highest I've seen is around 50%. So other than the meme stocks, GME and AMC, but the maximum they can push on in one day basis is around 30%. So you will not see anywhere above 100%, 200%. Those massive gainers with massive reward, that only happens between 20 million to 100 million range. So keep in mind that your edge are around 20 million to 100 million, and your edge are also between 100 million to 200 million. I would say no more than 500 million initial cap. That's where you want to see a massive multi-day runner. That's the first criteria. If you are trading them on intraday level, do not recommend at all. If you are dealing with a market cap that's under 10 million, then you are dealing with a micro float or lower float. You will need a lot of statistics to trade that, and also be really good with your risk management. For beginners, I do recommend stay in the range between 20 to 200 million. I think that's the best. If you want to stay consistent, then once you get a little bit more experience, go explore over 200 million and go explore under 10 million. I think those are, one involves less risk and pretty much no return. One, the under 10 million involves higher risk and higher reward.